So good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to today's Bull versus Bear webinar. Steve Miley here on the call for Trade Day. Morning, everyone. Morning, Clinton. Good morning, Greg. Good morning. GM. Yeah, welcome. So, going to go through regular run through in here today. Not a huge amount to add to what we've been talking about recently, but I will run through some of the charts and also look at what's been going on macro fundamental wise. We'll take a look at that Fed Watch tool. So all good. It won't be a particularly long webinar. There's not a huge amount to add to. We had very little data this week so far, very little on the wires. This really has had significant impacts, but I will run through everything. Just a heads up in here. From now on, I'm sure you guys are aware. Fridays we're no longer doing. Unfortunately, other commitments mean that we cannot do the webinars on Friday, so they have been put to one side for the time being. And then actually tomorrow, I'm a question mark. I will put an update on the in the trading room, on the heads up, and in the forums tomorrow, but we may not be able to do the webinar tomorrow either. I think I'm going to be unavailable, so my apologies for that. So it will be no webinars Wednesday. Today's Wednesday, Thursday, Friday, but we can certainly cover stuff today. And what I'll do right now is I'm going to do a little run through of what we've got coming up Thursday through Friday. So we've got to at least talk about what potentially might be happening, right? So first of all, today, as I say, there's been very, very little. We've got bar testimony in here. We had bar testimony yesterday, though. Nothing really came of that. So really not expecting too much in here from that bar testimony. And if we look ahead to what we've got in here, it's fairly light. Nothing of any kind of significant note excuse me, going into today. We've had some mortgage approval data in here, better from the UK. That was positive. Expecting like slowdown really in the housing market here in the UK. I know this is not necessarily pertaining to what you guys are seeing in the US, but nevertheless, it kind of gives us an echo, a reflection of how the global economy is moving. And what we've certainly seen in the UK is there was an expectation of housing. We're very much, driven by the housing market in the UK. In here is a very strong indicator of the strength of the economy. And the housing market has had a slight slowdowns more recently. However, mortgage approvals beat expectations in here, significantly strong. So mortgage approvals, people still buying houses and moving, etc. Crude oil inventories later on today, 10:30. Say bar, probably not too much. So we've got all that various crude oil data we get at 10:30 Eastern time later today. Some ECB and Bundesbank speakers later today. They're not really having any significant impact at the moment on markets. Let's go ahead and into tomorrow. We have CPI data out of Germany tomorrow. Okay, certainly going to be keeping an eye on that. You may wake up in the morning if you're in the US, that is, you may wake up to see some shifts in the European bourses, the European exchanges, European indices, because of this. We get the regional data and then the German data as a whole. So initially, the regional data is very early. We also get the EU in here, some various consumer confidence data in here, industrial sentiment data from the EU. And then we also then get the German as a whole CPI. All of this is probably coming through, all of this certainly before you wake up. If you're in the US, that is, it's 4 a.m. Eastern, 8 a.m. Eastern. Then we got the German CPI number as a whole. Okay. And then we do get tomorrow. So just going to run through the week in here, given that we probably won't have the webinar tomorrow, and we certainly won't have the webinar tomorrow as a heads up. And then we have, obviously on Friday, we're not having them anyway. So GDP data. Although GDP data, yes, it's important, but look at this, so backward looking. This is quarter on quarter data for Q4. I mean, what different world, we're at the end of March, right? What different world are we living in compared to Q4 of last year, right? A hugely different world, okay? And we get this core PCE data as well, PCE price data. Remember, the Fed tell us the PCE data is important to them, so it's important to us. Barkin is speaking tomorrow. And then in here, if we go down, going through the rest of the overnight in here, nothing really massive in here through here. We do get Chinese PMI, by the way, overnight. That's Thursday through into Friday. And then in here, if I go on to the day after, so go on to Friday, click onto this week in here, and scroll down for Fridays, where we kind of get the more interesting data through on Friday now. So we get the rest of the PCE data. We get UK GDP, that could be important. And here, French CPI, we get a Eurozone CPI, and then we get that PCE data. So this is going to be the more important PCE data. Remember that data in there, that's why it's split. That's the backward looking data. Where is it for Thursday? Oh, there's so much data in here. That's Wednesday. Thursday, the PCE data in here, core PCE data for Q4. So not so important. We go down here to Friday's PCE data, far more important in here. We have the PCE price index data. Remember, why is this important? Because the Fed tell us it's their preferred measure of inflation. Even though the CPI data moves the market more, this is seen as their preferred measure of inflation. I'll just jump in and answer a question from Tim in here regarding you can't trade the DXY, that's the dollar index on Tradeovate. I mean, it is on Tradeovate. It is up there. It's not as one of our permitted products. I have just been speaking to James about this. We are looking into it, and that's all I can tell you at the moment, Tim. Okay, I'll ping you a direct email when I have something more on that. I know you can trade the other currency pairs, but you can't trade the dollar index for whatever reason, even though it is available on Tradeovate. I will return to you with an answer on that one. Okay, we are looking into it. Trust me on that one. Okay. So that's what we've got coming ahead. So it's a fairly light calendar today, a little heavier going into tomorrow, mostly out of Europe. And then for the US, really the focus goes to Friday. Even though we get that GDP data on Thursday, it's so backward looking, it really doesn't move the market too much. Let's take a look at 5 things you need to start your day in here now. I think this is the old one. Let me see if I can quickly go in and get the updated one, the more recent one. So this is this morning's one in here. There. I think that's going to be the better one. It's probably going to be similar to what they've got in here. The big development in here. It's a lot of the same stuff in here that I had for you anyway, I think. Oh no, look, still 6 o'clock BST. Corrected on the 7:56 BST, so that's British summertime. Let me see if I can find the more recent one in here. If they may not have the US one out yet, or sometimes the US. Sometimes I don't even see the US one. So let me see if we can find that in here. Just bear with me. See if there's anything more significant in here. The main news in here, though, just as the heads up, is what we've got going on in here regarding Alibaba. So in here, 5 things to know. Last 24 hours. March 29th. 5 things. Let me see if that one. Okay, this is a newer one. Okay then. So UBS bringing back Sergio Amotti. Okay, nothing really going to impact us. Latest US banking crisis reveals a surprise calls US Treasury. Silicon Bank found itself in a position where it needed to sell Treasury. That's a surprise. That's old news. All right, that's nothing. They were basically forced to sell bonds. Right, so they had a liquidity crisis, forced to sell bonds that they normally hold to maturity, and then because of interest rate hikes, selling them under par. Okay, so that's why. Okay, words referred to trades as the world's safest haven, but not until you're forced to sell them. Okay, at subpar. So there you go. Alibaba. This is the kind of the real news that's kind of pushed markets up in here this morning, pushing higher. So Alibaba shares up 16% in Hong Kong. In here, Alibaba, $32 billion day signals breakup for China Tech. So because of a potential breakup of Alibaba and potentially other companies such as Tencent to follow similar paths, that's seen as a positive. Okay, the breakup, the China's authorities looking to shake up big tech in China, seen as a positive and seen a boost to global tech, global growth stocks in this morning. So in Asia, Europe, and in the US. So that has been the driver. This has been the big driver in here. There's a few articles on here. So if I go through splitting up an empire here, Alibaba's 6 main businesses. Alibaba cheap valuation shows big room to grow with overhaul. Alibaba's breakup lifts hopes China regulatory winter is falling, and then futures up climb as banking. Well, this is also banking careers crisis fears abate. I've said this the last 2-3 days in here. The further we move away from the previous banking crisis events, the calmer the markets become. You know, it's just like generally in life, right? Time being a great healer and all of that. Okay. It's like without a death in the family, the further away you move from that death in the family, slightly easier it becomes. And now we're not expecting the further we move away without contagion, then the hopes are lifted that there won't be a significant contagion, and we won't have other banking failures in here. So the further we move away, time being a great healer, fears are easing, and fears easing allow us to go back into risk on, hence stocks up, but also being helped in here by the push up higher in Alibaba in here and other Chinese and Asian tech stocks. Banking turmoil means recession fears are creeping back, but biggest picture, obviously there are recession fears, right? There are recession fears in here, and that's exactly why, just a quick jump into these before I forget though. European stocks are up, as you can see in here, around 3/4 to 1% up in here, and US futures in here up just under 1% in here this morning as well, 8 to 9 tenths. And this is why in here, because of the recessionary fears on the bigger picture though, because the short term are being driven higher by the fact that we've got this positivity coming through from Asia regarding tech shares. But on the bigger picture, look, this is rising again, okay? 475 to 500, this is rising, 60% chance, more of a chance of no rate cut at the next meeting. June, 475 to 500, still favourite, no rate cuts. So the market's now pricing in no further rate cuts, and then growing risk in here that by July we get no rate hikes. Excuse me, sorry, rewind that. No rate hikes, no further rate increases. But by July, potential for a rate cut creeping in. By September, looking for 25 down. November, 25, maybe 50 down. And by December, by year end, definitely looking 50 down. So the market's still pricing in, despite what Powell said after the meeting. Remember, after the last meeting, and that was after all the failures we'd had in the banking sector, the Fed, we just don't see it. We don't see rate cuts. They just don't see it, right? That's what he said, right? But the market doesn't believe it. BlackRock, remember yesterday or Monday, came out and said, the market, we're heading maybe towards a recession, but don't expect the Fed to cut rates. They think the Fed, that's wrong, okay? However, the market doesn't believe that. The amalgam of the whole market believes that we're getting rate cuts into the end of the year, which is keeping the bid with stocks, okay? And we asked, and we did yesterday, having had this move to higher yields, this is the US 10-year yield, obviously throughout this month, from the middle of the month, or the beginning of the month certainly, and then throughout the middle of the month since the banking crisis evolved, we've had a plunge to lower yields. Remember, yields, long-term interest rate. This is the US 10-year note yield. The last couple of days, as pressures have eased, we've had a backup. Yeah, we're going to back up to higher yields. However, this morning, a little bit of a stall. So far today, no follow through on that. And so the market's stalled in here on the Treasury bonds, and that's allowed stocks to go back higher again in here. And if I go and take a look where we are, so yesterday we get sell-off, and then a rebound in here. And then, that's quite a positive candlestick. We looked at this trend line yesterday. Market repeatedly flirting with this trend line, but did actually close, despite we actually ended up down on the day yesterday slightly, but did have a solid rebound. The market ended up closing above that trend line. And look, an impulsive move higher today, above that peak there and above that little peak there, above both of those peaks in here. Actually, just maybe right on that one there. That peak there, this is the S&P, by the way, 40.39.5. And there we have 40.40. Yes, we have just nudged that peak. And if you go to the 15-minute chart, there's the sell-off and rebound yesterday. And then we're up through these two peaks, peak here and peak in here. So all the risk is going up to the high, right? Back up to the high today. It's a big rejection of the downside. Yes, it's been kind of sideways and choppy in here. The bigger picture is up. There's that, remember that bigger inverse head and shoulders. The bigger picture is up. And although it's been sideways and choppy, yesterday downside rejection, down and back up again, taking out resistance now. A market that rejects the downside, breaks support, then rejects the downside and rebounds. You can see that on the daily. So breaks support in here, and then rebounds, and then pushing up through resistance today. That keeps, despite this choppiness that we've had in here for the last week, that leaves all the risk to the upside. And it's going to be helped as well by the fact that even though yields aren't necessarily plunging down, they're not going up as well. Okay, so all looking fairly positive in here overall for the S&P. And if we go and take a look at the NASDAQ in here, NASDAQ was a little bit under pressure to the downside yesterday. Why was it down more under pressure than the S&P? Well, going back to that yield chart, right? So in here, we pushed up to higher yields. Remember, the NASDAQ is very much full of growth stocks, and growth stocks in here are more sensitive to interest rates. Okay, so the higher yield move. Okay, previously in this sell-off during the banking move to lower yields. Okay, the banking crisis moved to lower yields. The NASDAQ's done pretty well. You know, we go take a look at the NASDAQ through here. Look, it's done pretty well. Okay, through that same period. Why has the NASDAQ done well? Again, and we made a new high, remember. Just last week, we broke above the high for the year. We intraday just made a new high on the year up here. Just pipped to a new high. And why is that? Because they're growth stocks, yeah, because of lower yields. Yesterday, we were more negative, and we did take out some support in here. Remember, we had this line, this support in here, all gathered between 12,730 down to 12,670. Okay, we did just take that out, but then look, took it out, rejected. Okay, then we're up through this trend line in here. I won't allow me to extend it out. Let me see if I can. Oh, yeah, done it. Pulled it out there. So we're up through this trend line. Okay, you're up through, if you draw the trend line down across from here, from the very high, kind of got this triangle line in here. It needs to take that out next. Like I say, I think that's the next big level, around just below 12,900. Take out 12,900. NASDAQ looks like it's going back up to the highs. Okay, that's just like towards 13,100, 1380. Okay, up there. So NASDAQ looking positive. The downside rejection, break support, rejects, pushing back to the upside. So you've got that trend line there, and then this little swing high here. That little swing high there is 12,836.5. Up through there and up through this trend line in here, 892 would be a more bullish signal for NASDAQ. Let's have a quick nod to the commodities in here. So daily chart on gold. First of all, inside day yesterday, had the opportunity yesterday. We had this breakdown. Look at the lows in here. Remember, we looked at this, I think it was yesterday. Got potential triple top. 1, 2, 3. Holds these lows, rejects the low. Now we have higher high, higher high, higher high, higher low, higher high, higher low. Okay, having rejected a breakdown through there, which would signal a triple top up here. So the market rejects the triple top with the inside pattern rebound yesterday. Slightly negative in here this morning, but for me, this is coiling and the risk remains to the upside. Look as well, 13-day exponential moving average works really well as support. Held there 2 days ago, held there yesterday as well. Okay, that's gold. Let's take a look at oil. Bullish, up, 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 up. Turkey situation helping matters in here. That's the cut in supply out of Turkey pushes the market higher, and also we're back more into risk on mode. Okay, generally broader risk on mode, helping us higher. Still looks bullish in here. Still plenty more potential upside for oil, having swung from a multi-month high to a multi-month low in here, pushing back up into this multi-month range. Okay, so short term for today, certainly looking more bullish on oil. Okay, I'm done there. Any questions on charts? Any questions on macro? Any questions on anything? And I will come back to you, Tim, regarding the dollar index. No? Okay, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Let's call it as no webinar tomorrow, no webinar Friday. Run through all the data for the next 2 days anyhow, but we'll put a confirmation of that into the trading room. So please do check that out. But let's leave it for now as there's definitely, going forward, no webinars on Friday anyhow, but unfortunately no webinar tomorrow either. So I'll be back with you probably most likely next Monday, but that might be a question mark. I'm actually traveling next week, so Monday might be difficult as well, but we'll certainly get back to you with our schedule over for the next few weeks on those webinars. As I'm traveling, the webinars may be more sporadic, but we'll give you a schedule on those and when we can try to make those. All right, guys, have a great trading day. Take care, stay safe, and I'll speak to you all again soon.